Hi everyone, welcome again. In this lecture we will look at the interest income and the dividend income. Now these are those components which are listed on the income tax pro forma. Now income tax pro forma is available to you on the notes on page 1 of the lecture notes. Now on page 1 of the lecture notes there are different sources of income. When we made the income tax pro forma on the board as well, I told you that we divide the income into non-savings, savings and dividend income. And on the very left side of the income tax pro forma, we list down all the sources of income from which we can earn the income. Now, one of those sources was interest income and another one was dividend income. We know that dividend income will go into the dividend column and the interest income will go into the savings column. The rest of the stuff will go into the non-savings. So there were only two things which go into the different columns. Now them two things are listed here on the board. Now there are a little bit tricky stuff as well with these two, so that's why I thought I should explain these things in a little detail as well. The notes are, the lecture notes, when we made the income tax pro forma, in front of the interest income we made the note 1 if you see your notes. Go to page 1 of the lecture notes and on the income tax pro forma, while we're listing down all the sources of income on description side, when we say interest income there was note 1. Now that's what we are going to look at now, interest income. Now what is interest? Everybody knows what the interest is. Whenever we take a loan from either bank or any other financial institution, no one gives the money for free, so they charge something back. That's what their business is. That's what they are sitting there. So they charge the interest because they're giving you the money. So that is interest income for them. Now if you invest money into your bank account, if we look at the other way around, so if you invest the money into your bank account, then of course the money which you invested in the bank account, the bank is going to use that money either by lending to someone else or by investing in some of the businesses which they're doing. So when you invest some money into the bank account, then they pay you some money because you have invested some money. So that profit which you take on your investments is called interest income. All right? Now most of the stuff which we will see at P6, most of the types of interest which we will be receiving from different financial institutions will be the gross ones. So whenever we receive something gross, we have to put in the straight form into the income tax pro forma. However, if we receive something net of tax, then of course we need to gross it up first before putting it into the income tax pro forma. So as I said, all of the interest income which we will be receiving during our P6 exams will be the gross ones, so no need to do anything. Whatever it is given into the exam question, just pick it up from the exam question and put it straight into the income tax pro forma. However, there is only one type of interest which is not received gross, which is received net of 20% tax, and that is I've listed here as well. Now that is interest income, as it says here, I've listed down. It is always received gross, except for one where it says received from the unquoted or unlisted company. Now when we receive an interest from an unquoted company, then it will be received net, so they deduct the 20% tax already. So whenever we see in a question says that interest is received from unquoted or unlisted company, then what we need to do is we need to gross it up. How we gross it up? Multiply by 100 divided by 80. That's what I'd say here. So multiplied by 100 divided by 80. Why we're doing so? Because 20% tax was already deducted and we need to gross it up. Alright? So that was our interest income. Now when we made the income tax pro forma, just beneath the income tax pro forma, if you go to page 1, there, after calculating the income tax liability, I told you that we need to figure out that how much tax we're going to pay. There are different rates. Say for example, up to £33,000 it is different rate. From 33 to £150,000 it is another rate. So there are different rates of paying the tax. These are called tax banding. One is starting rate band, then it's basic rate band and higher rate and additional rate band as well. Right? So there are different bandings according to which we have to calculate the income tax liability. Now as far as interest income is concerned, there is a special band for interest income or the savings income, which is known as the starting rate band. So starting rate band will only apply for the interest income. All right. Now how will it apply? I've listed here as well on the board. Right. It says note, first 5,000 of the taxable savings income will be taxed at the rate of 0%, and it is known as starting rate band. Now this starting rate band and also the basic rate band, higher rate band and additional rate band, these are given to us on page 1 of your lecture notes, where we made the income tax pro forma. Just beneath that there are different bands, like the one, this one here as well. This is also given to us in the lecture notes, page number 1. All right, and you do not need to memorize it as well, because these will be given to us in the tax table section in the exam hall. All right, so you do not need to memorize the memorize this stuff, that how much is the basic rate band and how much is the starting rate band. However, you need to know this rule. All right, so, and you need to demonstrate it while doing the questions as well. Now you might not be able to understand it in a better way. We will do a couple of examples as well in a minute, then you will understand it in a better way. All right. However, when we make the income tax pro forma, we have non-savings income, savings income, and dividend income. Wherever any portion of the savings income which falls within the first £5,000 of total taxable income, then that portion of the savings income will be taxed at the rate of 0%. All right, so that's what it says here. All right, if you want to note it down. All right, anyway, so that is our interest income, and that is our starting rate band of interest income as well. Now, after starting rate band, there are nil rate band as well. Now, what is nil rate band? Now, on top of starting rate band, it is an additional thing. On top of starting rate band, there will be nil rate band as well. Now, nil rate band will depend on where your income falls. If your income falls in the basic rate band, if your income falls in the higher rate band, or in the additional rate band. So it will vary. All right. Now, if your interest income falls within the basic rate band, then you will get the £1,000 of nil rate band. Nil rate band simply means that you will have to pay the tax at the rate of 0%. All right. So first thing was starting rate band, which was first £5,000 of the savings income. Now, if your interest income, if your the savings income, if you're a basic rate taxpayer, then first 5,000 of the interest income will be at the rate of 0%. That is nil rate band. Right. Likewise, if your income falls within the higher rate band, if you're a higher rate taxpayer, then you will get the £500 of the nil rate band. All right. And if you are an additional rate taxpayer and your income falls in the additional rate band, you're a too rich person, then you won't get any nil rate band, because HMRC says you are already too rich. You don't need to get any exemptions at all, so you will have to pay the tax. You won't get any nil rate band. So if you're a basic rate taxpayer, you will get £1,000 of the basic of the nil rate band. If you're a higher rate taxpayer, you will get £500 of the nil rate band. Whereas if you're an additional rate taxpayer, you will not get any nil rate band at all. Right? So why the HMRC is giving any nil rate band, and why is it giving the zero rate as well, the starting rate band? In order to encourage, the taxpayers to save some money and put it into the bank account so that you can earn interest. Now, when you are saving some money, how does it benefit the government? It will benefit the government because you are saving your own money. You are earning it and you are saving it. If you don't save it, then what happens is that you will have to rely on the government benefits, which the government does not want. So that's why government is encouraging you to invest in the bank so that you can earn some interest. Likewise, you will not only be earning interest, you will also be saving your own money. That's why HMRC says you don't have to pay much tax on the savings income. Unless you are too rich, then you will not get any saving rate, starting rate band, and you will not get any nil rate band as well. So that was our interest income. All right. Now, as I said, in order to explain it in a better way and to clear any doubts, we will do a couple of examples as well in a minute. But before we move to the examples, let us also look at the dividend income. Now, dividend income will always be received gross as well. So dividend income will always be received gross. So whenever you see any dividend income, you will have to pick it up out of the question and put it straight into the income tax pro forma. No need to gross up, it is already grossed. All right. So dividends are always received gross, so no grossing up is needed. Now, in dividend income as well, taxpayers will get the nil rate band. However, there is no starting rate band here. Starting rate band is only for interest income, but you will get the nil rate band in the dividend income. Now, what is the nil rate band in dividend? regardless of your tax paying bands, even if you are an additional rate taxpayer, even if you are too rich, earning over 150k a year, you will still get the £5,000 of the nil rate band. So even if you're a basic rate taxpayer, higher rate or additional rate taxpayer, you will get the £5,000 of the dividend nil rate band. Now what does it mean? Say for example, if your dividends are £10,000, if you have received £10,000 worth of dividends, first 5,000 the nil rate band will apply. So first 5,000 at the rate of 0%. Now additional whatever on top of 5,000 is, it will be according to the different bands. If you are basic rate taxpayer, then according to basic rate. If you are higher rate or additional rate, according to them rates. Alright, so that is our dividend income nil rate band. Right. So I don't think there is anything else to mention. So let us look at the examples now. A couple of examples I've listed down here. Actually, it is just one example involving two taxpayers who are friends. Right. So in the example, it says A and B are two friends, where A has £13,000 of property income, £6,500 of interest income, and same amount, £6,500 of dividend income as well. So that's the information about A. So I will read it out to you again, because I think you might not be able to see it. So that's why I'm reading it out to you if you want to write down this example. So it says A and B are two friends, where A has £13,000 of property income, £6,500 of interest income, and £6,500 of dividend. So that's A. Now B on the other hand has £6,000 of salary, £16,000 of interest, and £16,000 of interest, and received dividends worth £6,000. So that's about B. And in the note it says that A has bank interest, whereas B has interest from a loan stock of an unlisted company. Calculate tax liability of both for the tax year 17-18. Right? So we have to calculate the tax liability for both A and B. If you want to do these examples yourself, then just pause the video and do it yourself and compare your answers to my answers. However, if you think that you cannot do it, then just watch me do it. But I would highly recommend that you just pause the video, try and have a go at these examples, and then compare your answers to mine. In that way you will be able to understand the concept in a clearer way, because always try to have a go at the questions yourself, then compare your answers to your tutor's answers. Alright, so I've already made up the pro forma here for A because of the lack of space, so I will have to write it down a little smaller. And on this side I've made up the pro forma for B as well. Alright, so with non-savings, savings, and dividend income. Anyway, let's start for A here. Now in the question it says, in the example it says that A has £13,000 of property income. Right, so we know the property income, so let's write down the property income here. Right, so I've totaled them already. So non-savings income of £13,000, £6,500 of savings income, and dividends as well of £6,500, which makes a total of £26,000 of our taxable income. All right. Now after totaling it, what we need to do is we'll have to deduct the personal allowance out of it, and we know that our preference to deduct the personal allowance is to deduct from the non-savings income first, then from savings, and finally from dividends. Now why we are deducting the personal allowance? Because we haven't got anything else to do. Now if we had the deductible interest in the question given to us, then we would have deducted the deductible interest first before deducting the personal allowance. Alright, so there is no deductible interest in the question, so we'll have to deduct the personal allowance out of it now. Alright, so deduct the personal allowance, so less personal allowance. So how much is our personal allowance? Personal allowance is 11,500 for our current tax year. So we'll deduct the personal allowance of 11,500 out of this one. Now we have deducted the total personal allowance out of the non-savings income. The reason I have deducted the total out of the non-savings income is because total of the personal allowance, because total of the non-savings income is greater than personal allowance, so we can deduct all personal allowance out of the non-savings income. Now say for example, if the non-savings would have been £10,000, then we would have reduced the non-savings to 10,000, 10,000 minus 10,000. Remaining personal allowance we would have deducted from the savings income. Alright, so we have deducted all of the personal allowance out of the non-savings income. Alright, so there is no personal allowance to deduct from this one and no from here. So which makes the total again of how much? So again, total would be £6,500 here, 6,500 pounds here as well, and it will make £1,500 here, which makes a total of 14,500. Hang on, I'll have to deduct the 11,500 out of this one. So 11,500, which makes the total of 14,500. All right, so that is our total. Now, what is this total about? This total is, the taxable income on which we have to pay the tax. All right, so that is our taxable income. So that is our taxable income, in which 1,500 from the non-savings income, then 6,500 from the savings income, and 6,500 from the dividend income as well. All right, so let's calculate the tax liability now. Now, £1,500, because this £1,500 is non-savings income, that will be in the basic rate band. All right, so the £1,500 at the rate of £1,500 at the rate of 20%, because it is in the basic rate band. Now, where did I took this 20% from? From the bands, from the basic rate band. And now basic rate band is given to you on page 1 of your lecture notes, where the non-savings income is within first 33,500, I think, then it will be at the rate of 20%. All right. Now, £1,500 at the rate of 20%, that is our non-savings income. Now, what about the savings income? Could you tell me how much? How will we calculate the tax in the savings income? Now, we have studied the rule here that first £5,000 of the taxable savings income will be taxed at the rate of 0%. Now, what about this £6,500? So, shall I take the 5,000 at the rate of 0%? What do you think? No, because £1,500 has already been deducted. So, because it says that £5,000 of the total taxable income, first 5,000 of the total taxable income, if whatever portion of savings income falls within the first £5,000 of the total taxable income, that portion will be taxed at the rate of 0%. All right. So 1,500 has already been come into the taxable income anyway. So out of the 6,500, remaining £3,500 at the rate of 0%. Now this one is a starting rate band here, whereas this one is a basic rate band. Now, starting rate band 3,500 at the rate of 0%. Why did I took the £3,500? Because if you total these two, 3,500 plus 1,500, it is £5,000. So whatever portion of the savings income falls within the total £5,000, first £5,000 of the taxable income, that portion will be at the rate of 0%. All right, so that's how we calculate it. Now, out of the £6,500, 3,500 at the rate of 0% has already been deducted. So, remaining £3,000, now 3,500 already been taxed at the rate of 0%. Now, remaining amount is £3,000. What about that £3,000? Now, where does this savings income falls in? I think it falls within the basic rate band, isn't it? Because basic rate band, if you see on page 1, is almost £33,000, almost £33,000. So it falls within the first £33,000. Then it will be at the, because it is in the basic rate band. So this Mr. A will get the nil rate band of savings as well. Now in the basic rate band, he will get £1,000 of the nil rate band. So £1,000 at the rate of 0%, and the remaining £2,000 at the rate of 20%, because it is within the basic rate band. Now this £1,000 is a nil rate band. Now please make sure that you always communicate to the examiner that why did you took this 1,000 at the rate of 0%. Always mention it is nil rate band. I am writing NRB, but please make sure you write down the full form, nil rate band, and the basic rate band and the starting rate band. All right. So this £20,000 at the rate of 0%, at the rate of 20%, because it is a basic rate band. All right. After that, only the dividends are left. So dividends, we know that regardless of the tax-paying bands, taxpayer will always get the nil rate band of first £5,000. First £5,000 of the dividend income will always be at the rate of 0%, which is a nil rate band. So dividends, you can write down the savings income as well, because these three are the savings income, aren't they? We know that. Alright, so the dividend income, first £5,000. So if we write the dividends here, so dividends, first £5,000 at the rate of 0%, and the remaining £1,500 I've already listed down. So the remaining £1,500 will be at the rate of 7.5%. So because it falls within the basic rate band. All right. So dividend nil rate band will always be available whether you are a basic rate taxpayer, higher rate taxpayer, or the additional rate taxpayer. All right. So please make sure you calculate the tax liabilities. So £1,500 of the basic rate band of the non-savings income, because it falls within the basic rate band at 20%. Then we come to the savings income, because £1,500 has already been used. So 3,500 at the rate of 0%. That is our starting rate band. Then the nil rate band will also be available because it falls within the basic rate band. So 1,000 at the rate of 0%, and the remaining £2,000 at the rate of 20%, which makes the three of it, £3,500 plus 1,000 plus 2,000. This total is £6,500, which is a savings income. All right. Then we calculate the tax on the dividends. So he will get the dividend nil rate band of £5,000. So 5,000 at the rate of 0%, whereas the remaining amount falls within the basic rate band. So £1,500 at the rate of 7.5%. So please make sure you calculate the total tax liability. All right. Now we look at the second one. His friend, which is B, on the other hand, has got £6,000 of the salary income and interest income of £16,000, and he also received dividends worth £6,000. All right. So let's calculate his tax liability as well, shall we? So employment income, first of all, because he got salary. So first of all is employment income. Right then, so these are the three sources of income from him. So first of all, employment income, which is salary, then he's got interest income, and he got dividends as well. Now how much the salary is? His salary is £6,000, so employment income will go into the non-savings, so £6,000 worth of non-savings. He got interest of £16,000, but in the note it says that B has interest from the loan stock of an unlisted company. Please remember, as I said to you earlier as well, so interest is always received gross, so we don't need to do anything. We'll pick straight from the question and put into the income tax pro forma. However, there are a couple of exceptions to it. One of the common exception, which is always examined in the questions of P6, is this one: received from unquoted company. So whenever you receive an interest from unquoted company, like it says in this example, it says, what does it say? B has interest from a loan stock of an unlisted company. So whenever anything like this, it is received net, so we need to gross it up. And most of the times, examiner tells you that it is received net, it is received gross. All right, so examiner does not confuse you about it. Right, so he got interest of how much? He was paid interest of £16,000. So £16,000, what we need to do is we need to gross it up, multiply it by 100 and divide by 80, because 20% tax has been deducted, so it will go straight into the savings income. So £20,000 of savings income. Why we grossed up? Because it was received net. So whenever any interest is received from unquoted company, it is received net, we need to gross it up because 20% tax has already been deducted. So next thing is to put the dividends in. So dividends he received are of £6,000. So £6,000 of dividends income will come into the dividends. Alright, so these are the sources of income of B. So if we total that, and I put total here as well, so £6,000, then £20,000, and then you got £6,000 again, which makes a total of £32,000, £32,000, £6,000 here, £20,000 in this one here, and £6,000 here as well. So 6,000, 6, 12, 20, £32,000. Alright, so that is our total income. Alright, so I've totaled it, £32,000 in total. Now we need to deduct the personal allowance, because there is no deductible interest. So only thing now we need to do is to deduct the personal allowance. So personal allowance of how much? Personal allowance of 11,500. Now in this case here, we can see our preference is to first deduct from non-saving, then if anything is left from savings, and finally if there is anything left from dividends. Now because personal allowance is of 11,500, in non-savings income in this case is only £6,000. So we can only deduct £6,000 of personal allowance from non-savings income and the remaining 5,500 from the savings income. So we will deduct the £6,000 of the personal allowance from here and 6 plus 5, £5,500 of the personal allowance from here. We can't deduct here anything. So 11,500 in total we have to deduct. Alright, so this is total of 20,500. Now this is our taxable income on which we have to pay the tax. Alright, that is our taxable income. Now we need to calculate the tax liability. Now because there is no non-savings income, we got savings income of £14,500. We know that we will get the £5,000 of the starting rate band. So starting rate band of £5,000. So that is calculation of tax liability. So first of all, starting rate band, £5,000 at the rate of 0%. Then we got a nil rate band as well. Nil rate band. Because it is in the basic rate, he is a basic rate taxpayer, so he will be eligible for £1,000 of the nil rate band, of the savings income nil rate band. Right, so this is 5 plus 1, £6,000, whereas total is how much? 14,500. So £8,500 is still left, so £8,500 at the rate of 20%. So that is our basic rate band. Now this is total is savings income if you want to write down, or you can write down here, so that examiner knows about it. I mean, examiner will be able to see it anyway, but you have to communicate that you know this rule. All right, and always remember there are presentation marks as well in the exam. So if you have presented your answers in a better way, and if it is easier for the examiner to mark it, then of course you will get extra marks as well. All right, so this is our savings income. So 8,595 plus £5,000, it equals 14,500, I assume. But please make sure you redo all the calculations. All right, so that was our savings income. What about the dividends income? We know that he is a basic rate taxpayer, but regardless of the tax paying bands, he will get the dividend income nil rate band. So we'll have to calculate the tax on the dividends. So dividends, first 5,000 at the rate of 0%, we know it. First 5,000 at the rate of 0%, remaining 1,000 at the rate of 7.5%, I assume. But please make sure you check it from the page 1 of your lecture notes. So that's it. Now we need to calculate the tax liability. So first of all, £5,000 at the rate of 0% is equal to 0. Here 0 as well at the rate of 20%. So 1,700 I think. £1,700 here. Now this is £5,000 at the rate of 0. This is £7,500. So if you make the total of it, it equals 1,775, isn't it? 1,775. So that is our total tax liability. Alright, so that is our total tax liability. Now before paying to HMRC, we know in the income tax pro forma we have to do some deductions. Now we ain't got any investment in VCT or EIS or SEIS, which are tax reducers. However, we got some the tax deducted at source, right? Remember that there was this bit here, interest income. So 20% of the tax was deducted from the interest income before we were paid. So we were actually paid £16,000, where we have taxed £20,000 here. So we need to deduct the tax which was paid earlier. All right. So how much was paid? £4,000 was paid. So we will deduct £4,000 out of this one. So let's do it. So that is tax deducted at source. Now tax deducted at source, how much was it? tax deducted source was £4,000. So if we deduct the £4,000 out of this one, and if I do like this, sorry, so if we take 1775 out of the £4,000, so whatever the total amount is, all right, so that is our tax receivable from HM Revenue and Customs, because we have overpaid it, and we have paid £4,000, whereas we should have paid 1775, which makes us receive from HM Revenue and Customs whatever the balance is. So 4,000 minus 1775, whatever the balance is, please make sure you calculate it, and that's what you have to receive from HM Revenue and Customs. Alright, so that was it. I hope that I haven't missed anything. So if you want to do the quick revision, shall we do the quick revision? So here we go. So interest income is always received gross, except for one circumstance where it is received from unlisted company. Now we will get the nil rate band as well, £1,000 in the basic rate band, £500 in the higher rate band. We won't get any additional rate band. If we are additional rate taxpayer, we won't get any nil rate band. Alright, we will first £5,000, we will get the starting rate band, where the interest income falls within the first £5,000 of the taxable amount. Then that portion will be at the rate of 0%. Alright, so that was our interest income. Dividend is always received gross as well, and dividends income will always be taxed at the rate of 0%. First 5,000 at the rate of 0%, always regardless of the tax paying bands. Alright, now then we looked at a couple of examples. In first example, it was quite simple. I don't think there was any problem in it. Whereas in the second one, there was only a little bit of trick here, which was tax deducted at source of £4,000. Apart from it, everything was fine. I think if you did yourself and you did well, then it's fine. If you did any mistakes, please make sure you rectify the mistakes. All right, and always do the calculations again. Wherever I have done any calculations, please make sure, because I haven't used any calculator, so I might have omitted something. All right, so that's it for now, and I will see you in the next video, and we will continue with our journey. Goodbye.